Castrol India just came out with its earnings. Ravi Kriplani, the MD at Castrol India, joins in on board. Ravi, hi, afternoon. You've posted a PAT growth of about 27%, which is quite good. Will this kind of growth rate actually continue?
So let me first qualify and give you a little more detail with regard to the second quarter earnings. These are our second quarters because we follow the calendar year.
That's right.
So the 27% is a very strong performance, but there is a one-off exceptional in those results. We sold a piece of land that we weren't utilizing for about 20 crores, and that's like a one-off in the account. So if you strip that away, the underlying growth in operating profit is about 12%. Mm-hmm. And I think that's the number that we should take a look at in terms of assessing the underlying performance. And I think in the environment in which we find ourselves, it's a strong performance. You spoke about the macroeconomic conditions, and I think particularly for the industries that we address, which is automotive or industrial or building and construction, I think the going has been pretty tough. So in those conditions, to turn out a 12% operating growth profit is, I think, a strong, and I think just underscores the resilience that Castrol's had over the last 100 years in India.
I just want to get back to the point that you were making on this exceptional gain of 19.8 crore rupees, which you now clarify is on account of, sale of a piece of land. Is that included in the PAT number?
It is. So the 27% that you quoted was inclusive. If I strip that out, then the operating results are about 12% higher.
Fair point. You've also outlined a cautious guidance. Given the management, right now, does it also mean that the next few quarters are not going to be as great purely on account of the macroeconomic situation that we're currently in?
So the one is clearly what will happen to demand, and I think we've continued to see headwinds as far as industrial output, as far as automobile sales is concerned. But I think the other area of concern is that the rupee has depreciated almost 13 to 14% since the start of May. And for us, that's a big deal because most of our input costs are dollar denominated. And I think the rupee depreciates is currently running at 60. That could have a significant impact. So part of the reason for our more cautious outlook for the future, or the near future, in spite of good results in this second quarter, is the rupee holds to 60 or slips further, then clearly there are downsides in the margins that we can make. And if the demand doesn't pick up, then I think both a headwind on demand and an increase in cost of goods could put the profitability under some pressure.
So 12 to 14%, is that the kind of profit trajectory that one should expect in the next 2 to 3 quarters?
So we don't give guidance with regard to forward, but let me just pull back and say in the first 6 months, the operating profit is about 10%. So if the conditions repeat what they were in the first half, we should be expected to continue. But if the rupee stays at 60, then my sort of guess would be a little weaker than the 10% we've shown so far.
Tata Motors' total sales figures are out. They stand at 51,468 units. I don't have the comparable figure. Oh, yes, I do. 73,000, and that's been a significant drop. Ravi, just comment on that. Auto sales have been slumping. How are businesses like you coping up with the slump in demand?
So it is true, I think, and I think I mentioned this, that the segments that we cater to are under severe sort of economic pressure. And Tata Motors is an absolutely case in point where they've seen significant drop in their heavy and medium commercial vehicles. Now, luckily for us, we cater not just to new vehicle sales, but we cater to the demand of lubricants for all the trucks or cars or motorcycle in the country, and therefore just the current year sales have a limited impact. But our workshop sales are down, our B2B sales are down, building and construction is under enormous pressure, which is a big source of growth for us. So clearly, if you look at our results, our volumes are down. So even though we've shown a 12% increase in operating profit, the fact is that's come on the back of a 5% drop in volumes. And I think part of the statistic you just flashed with regard to new vehicle sales is part of the reason that the volumes aren't growing. Our net sales are 1% up. So we've had to manage the profitability and the mix and manage costs to be able to get the result that we have.